Guys, if you can sign in. Guys, if you can sign in and let me know if you guys are here. I am definitely here. I see 6 people watching. I just turned on the audio. Let me know if the sound is clear. Type into the YouTube chat. Guys, if you can sign in. It's a little bit late. You can sign in and let me know if you guys are here. I am definitely here. I see 6 people watching. I just turned on the audio. Let me know if the sound is clear. Type into the YouTube chat. So sound is definitely coming. That's a good thing. All right. Hey guys, Raj here with HammerXtraders, and today we have a webinar, a topic on option. It's going to be starting from very beginning to intermediate. Not going to be very lengthy, and in a particular way we're going to talk about what exactly is option, how is it executed, how is it read, and we have a particular channel in our Discord called Big Bull Option, which is power buy option. So when the market sentiments are up and big buyers come in, we tag behind them. So do let me know if everybody can hear me. I still don't see anybody. Yep, can hear now. Okay, great. Again, I'm just starting right away to get going. So on your desktop or on your screen, you would be looking at option trading mastery. It's a very simple one, but we're going to keep it where just give me a second. There we go. Let me move this mouse over here so that way I don't have to like keep going forth and back. Okay, what exactly is option trading, and what exactly is it in terms of stock trading or a stock market? So option actually existed before stock market came into picture. Basically, you are telling somebody that you are interested in buying a contract which is future related. Contracts are always future related, right? It would have a date, like in a contract. It's going to have a price or conditions. That's exactly what contract is, right? So option is a contract, and 1,000 years ago, somebody said, and I'm not sure if it's true or not, but I've just heard it from different people, from books and etc. For example, farmers had a strawberry crop, right? And
YouTube is not streaming. There's nothing on YouTube.
Oh wow. Okay. Hold on one second. Guys, I can see YouTube. You need to refresh it, Greg. Greg, refresh it. I don't have the sound from the Discord, so you guys can, well, I can't turn it off. Hold on one second. It might be echoing, right? You guys into the Discord. Let me get to Discord and let me mute it. There you go. But as far as the YouTube, guys, I can see myself on YouTube. It's lagging. So please somebody confirm that it's working now. See, this is YouTube right here, guys, and it's lagging, but it's working. This is a YouTube screen. Let's get that sorted. Got it now. Okay, great. Okay, all right. So, all righty. Again, this is Raj here with HammerXtraders. We're going to talk about contracts in options, how to trade contracts, which is basically an option strategy. So this is strategy. First, the one that we're going to expand on is going to be based on big buyers. So we call it a big bull, or power buys, and based on that. But before we get to that, my goal is to let you know exactly what option is, how does it work, how do you execute it. It's pretty simple. I have different platforms. I can show you a couple of them. I have TradeZero, I have DAS, different accounts. I can show it to you on those accounts how you execute it. Again, if you guys let me go ahead and put this, so at least I keep paying attention to. There we go. So that way, if something happens, the stream goes out or something. So, okay. Again, my touch screen is, I should have worked on this yesterday. Just give me a second, guys. Okay, here we go. Here we go. Still having a little technical difficulty here. All right. Okay, so in this course, guys, we're going to learn what is exactly is the foundation of your options, right? And still this is not working. Why is this not working? So we're going to talk about foundations, then Greek terminology into options, then we're going to talk about strategies, and in between we're going to demo you how to take live trades, how to execute them, how to search for them, find the proper contract that you're looking for, and how to read it. And then, of course, next part is risk management and the psychology. That's how you're going to go about it. I'm going to go through pretty quick. I think we have lost a little bit of a time here. So key terminology here. Okay. So in option, you have a strike price, you have premium, you have expiration date, and you have ITM, OTM, and ATM. These are very basic terms. Strike price, like for example, if you happen to say Apple, which is currently like at 210, that's your strike price. Now, you want option bullish, which is going to be called call. And if you want 220 or 230 or 250, that would be your strike price going into the future. Now, strike price can be negative or bearish. That means that's going to be a put. That's in two simple terms: calls and puts. So the fixed price at which the option can be exercised for the date that you have taken the contract or prior. Again, when we talk about contract, these are not like where you have to execute it on a certain day. You can execute it before, and you can execute it before the option expires. But you cannot execute after the expiration because it's worthless at that point. All right. So then you got premium, the price paid by the buyers to purchase the option contract. This is the maximum loss that you're going to pay as a premium. Like, so for example, what exactly is premium, right? So Apple is at 210, and you happen to buy a 220 2 weeks later call. The contract price is $5. That's what you have to pay. You don't have to pay $210. You have to pay $5 multiplied by 100. I'm going to explain that a little bit later. But $5 is your premium. So contract in option comes in bunches of 100 shares. Again, you're not buying shares. Do not make that mistake that you're buying shares. You're not. You're buying a contract. In each contract, you're going to have 100 shares of any stock. It's set up like that only. And there's a difference between American option and European options, and I might touch on that later. But American options is a lot easier to execute, because you can execute it today and you can close it tomorrow. You don't have to wait 2 months or 2 weeks whenever your contract expires. As long as you're making money or losing money, whatever the situation is. So the premium is the price that you pay for your contract. That is called premium. And then of course the next is the expiration date. Okay, so the last date that option can be exercised, after that becomes worthless. That is the expiration. ITM, in the money option, has intrinsic value and would be profitable if exercised at the right place at the right time. Right time, right, not right place, right time. OTM, out of the money, that means you are actually losing money. You are below. At the money means you are right at that same level where the stock price or a strike price is, or equal to the current strike price. Okay, so we're going to get into the next slide pretty quick. Everything is good, right? All right, so moving into the next slide. Okay, so this part is a little bit more deep dive, and for beginners, I don't want to confuse you guys too much. We can have this discussion another time. There are terms when you're looking at option and how strong options are. It's going to be called delta, gamma, theta, vega, and rho. These are the terms. It's right here, the meanings of it. You can do a little more research. Like I said, we have a lot of beginners in our room, and they have not done options before. So how good are these? Right now, you don't have to worry about it. Okay, right now, you do not need to worry about it till you actually fancy yourself to be the option guru. Let me just put it that way. Basically, it defines like a different terminology. Like I said, it's a Greek, right? The volatility sensitive, the interest rate, against the time versus, where the contract is right now, or the strike price is right now. Those type of things, price sensitivity. So we're going to skip that. We have a next slide, which is also talking about that. So delta measures the price movement, gamma, the delta accelerations, the first one, the theta, the time decay, like how fast it's decaying your contract. So you bought the contract like a month ago and only 2 days to go, but the price hasn't moved. That means time decay, always negative for the buyers. Vega, it's a volatility impact, higher for the longer dated options. If the stock moves higher and you have plenty of date, that's your vega for you. That's always good for you. The rho, interest impact, is smaller short-term options, fluctuates in that. If you get to know all these, that means you have done, like, literally, you can read option beyond the strike prices and contracts. But that is another day, another time. Pro tip, Greek works together. Experienced trader monitor all of these simultaneously. You don't have to worry about it, like I said. Not now. All right. Okay. Again, option pricing and implied volatility. We had done this earlier. We're going to skip this part as well. Okay. So this is how you're going to read your option. Okay. Again, I'm going to go back to the slide. These are the key words that you have to remember. Strike price, take note. Strike price, premium, expiration date. This one is not necessarily you have to know, but it's a basic concept. Are you in the money, out of the money, at the money, right? Again, strike price, premium, and expiration date. That's what we're going to look for. So now this is an option chain. So every broker is going to have an option chain that you have to subscribe to. Of course, you have to be qualified to do options. You have to call them. It's not that, you have to be qualified as a professional trader, this, that. No, none of that. You just have to write to them or fill out a form and say, hey, I want option on my account. So you have to get that done. You have to fill out a form, just like when you start an account in stock trading, you have to fill out a form just like that. Okay, there's a form, simple form. I recommend you get level 3. So there's 1 level, 2nd level, 3rd, 4th, and 5 levels. There's 5 levels, and 5 levels means it's way above our head. But having said that, what it is, you can take naked calls and puts in level 5. Level 4, you can take naked puts, but 3 is good enough. Ask your broker to have 3, level 3. Okay, so again, this is a reading of an option chain right here. And why is this my key not working, man? So for some reason my touch screen, I must have set it on. I'm not going to waste my time on it. So we have Apple option chain, and what we have over here is, I'm going to move the cursor. This is calls. This is the volume. Okay, I forgot to tell you guys, you got to keep an eye on the volume when you're taking a contract. Okay, the more the merrier, the better price you're going to get, the better executions you're going to get. Okay, less volume. I mean, this is pretty good volume, by the way. Okay, this is a number of contracts that we're talking about. Your bid and ask. Bid and ask, just like how you buy your stocks and sell, there's going to be bid and ask. So this side is call, and this side is puts. So you have bids. You have 185 ITM, 190. Current price is again what? 195, right? 195. So this is at the money right now. And this is 205 if you're taking a put. If you're taking a call, you are positive right here. If you're taking a call, that is. Now, so you have calls, puts, and we're not going to worry about puts necessarily right now. So we're going to ignore this part right here for now. All right. We're going to go for calls, and I'm going to show you. This is all you need to know: bid, ask, volume, and the strike price. So if I tell you right now, Apple current price is 195, we're going to take 210 strike price 2 weeks from now. So 2 weeks from now, next week is going to be not this Friday, but next Friday is going to be May 1st. Add another 7 days, so May 8th. May 8th, so you have literally about 15 days, 16 days of trading. I mean, not trading, rather 5, 10, 12 days of trading, 13 days of trading. And if the strike price from 195 happens to go up, and suppose it goes up by tomorrow, so your bid and ask are likely to move from 540 if the stock goes up. Again, you don't have to go deep into this right now. I'm just keeping it very basic for you guys. We will talk about this in our room. We'll have open discussions for new members and old members and everybody alike. You guys, most of you guys are used to it, right? And that's why we work as a team, so we discuss it if you have a question. Right now, like I said, basic. So 540 is the bid. You always try to buy your contracts, if you going to buy at 540. You know, if you it's opposite for the puts, if you can get it, that is. You know, this is because you want lowest price going upward. So if this thing goes up 200, again, don't look at it. This is a strike price for. I mean, this is an option chain for today. Okay, I'm going to show you next slide how it moves up or comes down. That we're going to go. But if you buy it at $5.40 multiplied by 100, remember the part where I said each option contract, no matter what the stock is, it's going to be multiplied by 100. Okay, multiplied by 100. So If you multiply 5.4 into 100, your premium is going to be 540. That's the price for one, but you cannot buy one. Okay, one contract always means 100. So you're going to invest $540 right here. Okay, and if the stock goes to 200 by tomorrow from 195, considering Apple doesn't move that fast and volatility is not there, that's a pretty good volatility for Apple at 200 by tomorrow. That price is very likely, I cannot be exact certain, but I can tell you at 200 by tomorrow, and you have like 12 more days to go, this would be about $11. That means you buy a contract for 540 and you sell it for 1100. That's pretty good. You invest 540 and you get paid 1100. You basically doubled your money. But it has to be done right. Again, we're going to talk about why our system is going to be different. The power buyers, the big bull system that we're talking about in our room. Okay. So again, we're not going to touch this part at all, which is puts. So that is not, we will take some puts, not today, not now. All right. So now we're going to go into the next slide. Now here we go. This is a real time how to execute an option, right? So Apple stock is trading at 195, right? You buy one contract, $200 call. Remember, 200 call is what? Strike price. Okay, at a $5, for example, you have paid $500. So exactly what you're paying is $500. Okay. So again, this is fantastic slide. You guys are gonna love this about option. So look at the gains over here. If Apple, you have taken a July $5 premium over here, $500, and you have taken $200 call for July. And it doesn't say the exact date, but in contract you can have weekly dates. You can even do every 2 days also. So you're going to invest $500. Now, are you obligated to buy Apple 100 shares or take it off? No, you do not. Either if you're in the money and you have enough money in your account, your broker is going to push that at you. So the best is to execute it. If you don't have enough money, like so, Apple is like what, $200. You have 100 shares. That's $20,000. So if you happen to have $20,000 in your account and you let the contract run out, broker is going to get you that contract executed because you said on the expiry date. I mean, you can talk to your broker. They can set it up where it just expires as well. But don't make that mistake. It's a very tiny thing. Most of the time it doesn't happen, but just for a safety reason, go ahead, close your contract. The date expires at least. Okay. If it's like in a big loss, obviously it's not going to matter. So here's the best part. So there are 3 scenarios. So Apple rises to 220, okay, before your expiration date. You're going to make $1,500 right here, guys. This is what you're going to make. I wish my pencil was working so I don't have to bend down to reach out to my mouse. So you're going to make $1,500. That's 300% return. And you have invested how much? 500 right here. Okay, this is what you've invested. Now, Apple stays at 200 at the time of the expiration. That means it didn't go anywhere. Okay, you going to lose your $500, 100% loss. Now, what happens if Apple goes to 180 at that point? You're still only going to lose 500, guys, right here. So you're only going to lose 500 no matter what. Okay, I recommend you close your contract the day it expires and or before. I mean, we like you to execute, we like you to talk about it, but we'll teach you how to execute this thing as well in a little bit. So this is expiry out of the money, this is at the money, and this is in the money. All right. So if Apple goes, you made 1,500, but your max loss is only 500. That's correct. That's how options work. Okay. And you can lose. I mean, if you don't set your risk and limits and how much you're going to do every option, you can turn into a wild proposition as well. So don't do that either. Okay. Now we're going to go to the next slide. So how do you read your option chart, right? So you have your stock prices, expiration, it's going to be on your x-axis. This is a chart. So you have y and x, right? So you should be able to read y-axis. This is flat one is x, sideways is y-axis, right? And break-even point, that would be a, and then you have the risk boundaries where you can set up your max loss, or you can do 100% max loss, or you can just let it run. All right. So, but it's just like trading a stock. You have a chart, right? That you have horizontal, where you're going to have the time, and you're going to have your prices. So your Y is going to tell you profit and loss, and your X is going to tell you when it expires, when you take that contract. So here it comes. So you have taken a $500 call, a long call option for this, and you have paid right here. You're going to break even at 205 because you paid $5 as a premium, right? So you've taken a $200 option for Apple as a call, and if it keeps shooting up before it expires, depending on your date and how quickly it goes, the price goes to 230. You're going to be $2,500 in money right here. If the price goes to 230, price goes to 220, you're going to be $1,500 in money. All has to happen before the expiry date. Okay. Now, what happens if, because you have taken a option on this at 200, right? Because remember, Apple, when you bought it, it was 195. So what happens if on the expiry date, which is the X date, we're going to say X on the expiry date, Apple is at 205. You're going to break even because you just paid premium for 500, So 500 is your premium, 200 is the call, so you're going to break it even right at this point right here. But any time above an expiry date is wherever it is, it's already near or past. You are from here on in ATM. Okay, and the way to hold and take profit, that's a strategy. We're going to talk about that a little bit later. Okay, everybody's good? Let me know if everybody's good. I'm going to slow down just for a second. Okay, so this is an example of Tesla. Okay, now this is a put. Okay, we showed you how to do call. Now we're going to talk about how to buy a put option. So put option, same thing. If Tesla, you're buying a Tesla trading at 250 by June 1st, you're saying you're taking a $5 put, which is 245 strike price. You paid $8 premium, it goes into the $8. But if Tesla keeps dipping beyond 245, then you're going to keep making money. If a Tesla goes to 210, you're going to make $2,700. Now you put 800 over here, and max you're going to lose is this. All right. Thank you for letting me know, guys. All is good. Come on. Yeah. So this is a put option as well, you know. If the price keeps receding on the backward side, you're going to make a lot of money. Again, depending on market conditions. Then, besides the call and puts, overall, guys, there is bearish and neutral strategies. Like if something is going down, that's bearish, of course. And if something is going sideways, okay, it's called neutral strategies. You can actually trade those as well. Again, we're not going to talk about them. So bearish is long put, bear put is spread. You can put that. Short calls. And then you got the neutral strategy, which is straddle, strangle, iron condor, all that. A lot of details. Like I said, I don't want you guys to focus on this thing. It's just that I want you to know these things exist. But you don't have to worry about that for right now. In our option channel, the bull, big bull option channel, we don't have to worry about that. I mean, I have slides and knowledge if you guys ever need that. We'll talk about covered call and all that stuff. You have bullish option strategy, same thing. Okay. So today I happened to bought CRWV option. Okay. I bought it at 430. It went to 380. I bought it 2 weeks ahead, 10 days ahead. So am I panicking right now? No. Why? Because I have a system. Okay, by the way, I paid $437. The price for that option is $370, right? So am I panicking? The answer is no, I'm not panicking. And under our system, you let it run 200, 300%. And if you have back tested your system, which pays you 7 out of 10 times, and the max you're going to lose is 100%, that is the key. You're going to lose 3 times, you're going to lose 100%. But for the others, be patient to take your profit at the highest levels, in the money and beyond the money. So manage your emotions, okay? Fear and greed are your biggest enemies. Never chase trades. So, when I was looking at this options, it was $4.80. I waited for 440, got filled at 437. Okay. Number 2, stick to your plan. Again, stick to your plan. Create a written handwriting plan. Every exit, risk rules, follow it religiously. Discipline beats intuitions. Okay. Intuitions are like, you are making things up yourself. Okay. Don't go with the instinct. Have a system that can win you. Okay. In our channel, by the way, we are discussing option, but we are traditionally short. We intraday trade is short, and this particular big bull option that we are talking about is we're going to hold it for a week, at least minimum 9 days or 10 days. Okay, so it's not like you have to get it today and get out tomorrow. Now, this is the one that you hold, let it mature. You're going to take the losses, and you're going to take fantastic 400, 500, 1,000% gain. And I'm going to show you last week's result. This is our sub channel. Again, if I were to show you my Discord, all we did this morning was short. Around 10:30, we go ahead, take these options. And there's another option channel, which is not based on the big buyers, big bulls. That channel is we go on volatility news and momentum stocks. So we have, in HammerXtraders, we have different ways of coming up with the process of being on top of things. Like if short market is conditional for today, or the momentum is not there for the options, again, this is a lot more reliable than those. But having said that, we are primarily 90% short, but we go long, and we went long 2 or 3 times today. You should be able to see our chart on X. Which ticket was it that we went long 3 times this morning, or 4 times, from 95 cents, took it all the way to 120, and most of the time we sold it at 117. That's 20%, 20%, 20%, 3 times. It was 4 times actually, but that's 60% already. So if I'm going to tell you I'm short and I'm only going to do short, I'm ignoring the rest of the market. Lobo was the ticket. We went long 3 times. Lobo got crushed at the end when the market opened, but we already had 60% gain on Lobo. Yeah. So again, we did it live in our room. Everybody took it. Some got it 2 times, some got it 3 times. You just have to take the trades. Okay. Number 3, accept losses gracefully. Okay. Just in option, one thing is in short, you can clean up your account. You can take bigger losses if you do not accept your losses. So yesterday there was a ticket, WLDS. I'm going off the topic a little. We shorted WLDS, made our average 245. Very promising average. I got it to 252, extended a little. 283 stop loss. It never paid us. It took a stop loss. So huge candles were coming, big momentum was coming, and WLDS is one of our better short stock. So we shorted initially. Then it actually went up again, and then we decided that this time there's almost like 94 million volume and blah blah blah, and people are putting 2.3 million to 3.4 million per minute volume candle on it, and the next levels are like 365 and 450 and 5. So we go long. So first thing first, I accepted my loss at 283 when my average was 252. Normally it's 277 when I get 252 average, but it went up a little bit higher and took me at 23. Pretty big size, extended size. So took it gracefully. Next one, we went long, same size, and it was 10% or 7% in money, but it was so fast I couldn't do it. And the minute it fell to my threshold, I took another loss. Okay, so I took 2 losses back to back on it, and then shorted one more time, and it still took a loss. But then by 2 hours later, it got into a range play where 275, 280, and 285 to 230. They were dropping it a couple of times. So we took the last one, and then after that, right around when it was at 240 something, they decided that they're going to offer 5 million shares at market at 170, and the stock ended up being $1.10. So we did not recover fully, but the key point is we don't take too many losses. We did take that one. Okay, we took it 3 times, but we also recovered some money. Did we recover all? No, I was still 20% red in that ticket. Doesn't happen often, but I had 6 other tickets which actually made money. Okay. It's all posted in the room, and we'll talk about it. So if you take your losses gracefully, a little bit, to the point, but I can tell you somebody did not take their loss, right, at 283, and they took it at max at 345 and a 240 average. There's a problem. So you are 35% in loss there. The next one we go along with, and we lose another 7-8% there, a tighter loss, then you are actually at 45% at loss. It's not going to be recoverable because you don't know that stock is going to go 110, right? That's just an anomaly where they offered once in a while, they offer in the middle of a market. Okay, so accept your stop losses gracefully. Don't let it go too far. In this option scenario, it's really easy for you. I'll tell you whether we're going to take a stop loss at 50% or 100%. Most of the time, I'm going to let it run out. Okay? Because also, we're going to win 7 times and we're going to make over 300 to 400%. Okay? Avoid over trading. So basically, we, in our big bull option, these are all big caps only. And we going to follow people who are in there with big money. Okay, and they keep pumping it. So it may not run today when the big buyers come. So when big buyers file their D1, things don't move. By the way, you can get all that information when big buyers are coming. You can talk to ChatGPT. You can go certain websites. They will tell you, when big buyers are. Then you have to make sense of the levels and what exactly are you wanting to do with it. So it's not that easy, but having said it, it's a lot of fun. Okay, this one is gone out of the shape over here. And then, you need to trade your journal. I mean, like every day, journal your trades. My bad. So now let me get you into our, hold on. Okay, so what should you do in your option trading? So if you have a $30,000, I don't want you to spend more than $300 per trade. Between 1 to 5% per trade is fine. And again, I'm sticking to Big Bull Option channel from our Discord room. We have different ones. I'll show it to you in just a second when we're done with it, what we have. Now, having said that, when we have this 1 to 5% per trade rule, that means you're not going to blow your account. You're going to take 1%, which is like you have $30,000. That 1% is $300. Okay, that's the max you're going to lose. Have a clear, defined risk strategy. So take 300 to 400 in profit, max loss, or 50% loss. Okay. Diversify across different sectors. Okay, so I like to go heavy in the momentum of a sector which is hot. Okay, sector which has momentum, which is hot. This is what I wanted to say. And set a stop loss or profit targets. So option can only be executed in market time. So you don't have to wake up 4 in the morning. You don't have to do 6 in the morning. I don't even get up. I mean, that was a long time ago, 6 years ago. I used to be like waiting for 4:30 in the morning. When is it going to happen? When is it going to happen? I don't do it anymore. 6:20, 6:30, 7 o'clock, I'm comfortable. But coming back to option, it can only be executed after 9:30 and 15 minutes or 10 minutes before the close. So you don't have to be coming in early for any of these. Now, if you set your profit target and in your montage or your sell or whatever buy platform or area of your platform, if you do GTC plus or GTC, good till cancel, it's going to execute when your target is hit. Okay, and last one, it says monitor portfolio Greeks. Okay, Greek, I would like to keep it very basic. If it's like, again, I don't want you to complicate this thing. So right now I'm trying to tell you not to go too deep into the Greeks of it. But once you become professional, you can look at it and say which direction it's going, and you can close it a little bit early. But having said that, our strategy is a lot more simpler. We're going to take it for 7, 8 days or 10 days in advance. Make it run for 300% to 400 to 500 to 1000%. We're going to leave some contract after 250, 300%. Let it run wild. Once you earn money, right? So you cannot fade unless market crashes. So rule number 1, preserve your capital. Rule number 2, never forget the rule number 1. Always eye your money profits. Okay, so this is last week, and we have charts to tell you this. Okay, this is last week, guys. Oops. And if you're looking at this, and again, these are not small caps. These are mid caps to big caps. CRWV, iron, OKLO, CRCL, ORCL, TEM. TEM has gone up from 18 cents to 48 cents, and then it's sticking around somewhere around 17, 18, but we have this Friday till go to. Oh, we closed it already, my bad. Again, take a look. This is just last week we're talking about. We're talking about just last week. This AVGO, RKLB, and CRWV were last week. Okay. This is overall since October. This is another channel. This is not the big bull. This is the momentum one. 18 wins, 17 losses. Your win rate is pretty high. Average, and then you can see all that. Okay, now we're going to go to the next channel. And does anybody have a question? So what exactly is Big Bull channel that we have, and why are we so excited about it, right? So big influx of funds from big buyers come on these stocks, on big caps, and we keep track of that. So we have, you can get these informations from different websites, and like I said, AI tools and whatnot. You can do your homework in our room. We work as a team, and we do our thing together. So I usually between 9:50 and 10:30, most of the D1 filing is already into the system, and that triggers the big influx of big funds. Big funds, when we're talking about, is minimum orders over 100,000, and when it reaches a crescendo of multi-million worth of investment, that's what we call as big influx of funds. That's what we call as big bull. We call it a power influx. So again, you can find those data from different places. Again, we limit it to 20 of our favorite stocks, and we try to do an entire week only 4 to 5 stocks. Wait time 7 days. Most of them are running wild. Let me show it to you, and we'll talk about it. So again, after you have seen that, you have to check out your support and resistance, what level, go into a little bit more, see if there's positive news. So there's the big influx of buyers, right? Then you have support and resistance. You check out where will it go, where will it fall to. If there is consolidation, how is it holding? Is it going up, momentum, all that? You have to do all that study. Then you got the positive news, and then you got, if there's earnings and XYZ and other positive stuff, you take an execution at that point, okay? And we will put it up when we do it every morning at 10 o'clock. Before 10:30. So again, take a look. This is Meta right here, okay? Meta this is big influx of buyers. These are power buyers, okay? They came back to back on Meta on 8th, 9th, and 13th. Okay, this is 10th right here. I'm sure it's not very clear for you guys, but I'm just trying to read it for you guys. So again, they came right here it triggered, and right here it triggered. Now this is 13th, and I can pull up any stock. We did this in our room, okay? We only trading 20 stocks and 4 to 5 stocks a week, the one that we really know, okay? We're not trading everything. So again, it took an entire day. The price has stayed right here. So price has stayed somewhere around $3. Now, these are big buyers. When the big buyers have come in, what happened to Meta? It just shot up. $34. So you invested $3 and it went to $32 from $4.13 or $4.10. So you got in right here, let's say $5. Right there, guys. It's below actually. So this thing is not that accurate. Again, I'm using mouse instead of pen. If you do this, it's over here, $3. And if you got in anywhere near 3, it's at 340. It went as high as 17, and it went even higher. So this was last week, and this is in our Discord room. We had a discussion on this. So all of a sudden, you're looking at 1,000%. And once you're in money, and what we did was we took a 640 call when the stock was somewhere near 630. And once you are in money right here, once you have closed a couple of contracts, so I take like $1,000 worth of contract. So I closed like, at 500, I closed it somewhere around for 300%. The rest of them, I'm just letting it run to how far it goes. I'm in the money. The worst going to happen is going to stay money. It's not coming back to 640. 640 was the call for a week later. And why did it shoot up so much? It actually went higher than this, guys. So why did it shoot up? Again, the time volatility, if you take that into consideration, your contract, you took it on 410 and 413, and you took it for 417. No, if you took it for 414, that means you're taking it for April 24th. So April 24th, and this thing just goes crazy. And 18th, it was even crazier. So this is one example. I'll show you all the examples that we had. We won't have enough time to do it because that's in the Discord room discussion. So this is another one. Again, big buyers come in right here.
Just hard.
So the price is somewhere around 140, and we have taken a call for 150. So this is on 10th right here. So the price is $1.25 to $1.50. Just say wherever you got in. When we said it doesn't matter at this point because we know the big buyers have come in, and this thing goes to $16. How long did it take? Guys, same thing again. It was taken on 10th. And it went 1000%. Pretty exciting, right? So I'm going to go to the next one very quickly. And again, we have detailed discussion about this in our Discord room. This is AVGO. So you saw Meta. We did Microsoft, QQQ. They were just crazy good. Okay. So look at this. Again, this moved 1500%. The one before that, 700%. This one, 1000% as well. $3 to 34,000%. You got Microsoft right here, 1500% moving. Big buyers come in, stock keeps going up. So we discuss it. So what are the criteria when we're discussing big bull stuff? Is it just that? So the big influx of funds are coming in from the big buyers. Okay, we paying attention to that. What is the news? What is the market momentum? What is sentiment? Is the war on a ceasefire, or is it going up still? All these have to be considered, discussed, made sense out of. So a lot more goes in. And what is their support level? Are they all-time high, or are they at a support in some sort of a support or a breakout? I have trends that I follow very closely in off hours with the trend spider, and that tells you that Microsoft was 38% down from the all-time high, and it's about to break out. Iron at $38 has a trend that's about to break out. So you take that into consideration. You take that with the big buyers jumping in. It's not just the big buyers don't move this thing. Let me tell you that. Retailers move the stock prices. Big buyers come in, they hold it for a long time. So when they come in, we actually are excited that they have put in money. Obviously they want to make money, so they're going to hold it for a while. So a lot of people, when the news gets out, then there's PR segment of it, which is positive news kind of stuff. If there's really a breakout in the channel, big buyers has come in. Whole bunch of 5-6 criteria has come in, and that's how big bull calls are shaped up for us. Okay, so it's not that simple as just finding one bit of information and going gaga over it. All right, so make no mistake about that one. You've got to do your homework. But in a conversation, we can't cover everything, right? So again, this is all from last week. Then you got AVGO. So AVGO, big buyers come in. AVGO was hanging after 400 something. It had come down drastically to 330. Trend was breaking out. Market was breaking out. Ceasefire was happening. AVGO pundits were calling this to be $500 stock. We take advantage of that momentum right away, and we buy it between $3.75 and goes to $17. It makes a move of 450%. You get it on 10. This is all last week, okay? Again, hopefully you guys enjoyed what I just showed it to you. So again, I don't want to make this a very lengthy conversation. So the green line mark is when big buyers come in, okay? Big bulls come in with millions and millions of dollars with their D1 filing. When D1 filing happens, it gets accumulated. When there's enough of that, that is our big power influx. So that's our big bull theory at that point, okay? Anything else, anybody? Because we're on the last slide. So key takeaways. Flexibility is power. Master the Greek. Once you have time, once you get into that, 3 months down the road, 5 months down the road, you'll become very comfortable in option. Take it to the next level. Okay? Start defined risk. How much you're going to risk, what's your size is going to be, and manage your risk. Okay? Risk manage it, like as important. So if you take less profit and keep taking 100% loss, it's not going to work. Discipline wins. Okay? Don't get swayed. So every chart that I'm going to show to you, so the big buyers come in, did this thing move? The answer is no, it did not move till the next week. So another example, did it move right away? No. Did it move right away? Look, big buyers came in. Did Meta just move out of the block? The answer is no. So you got plenty of time to get in front of the computer, join our Discord, have the discussion. What we talking about it, you can ask questions live. We are on the mic. We are talking to our members all day long, live in audio as we trade. All right. So again, we can't say anything about haters. We just want to talk about our members, how we do it. So I don't really care. Don't do all that. And then this part right here, that's us, our Discord. Now I'm going to show you guys how to take trades live, right? So I am going to sit down and I am going to, let's see. Yeah, I'm comfortable now. A lot more comfortable. Let me put this thing a little down. There you go. By the way, you guys probably have not seen my setup. I have a pretty huge setup. Okay. Like this. All kinds of stuff. Okay. And this is one of my biggest screens. And then I have some more screens behind it as well, guys. But it's not the setup that makes it all the money. It's actually how you spend your time with it, right? Again, so hopefully you guys enjoy that. So it's an algorithm. I cannot create those things. It's available when the D1 filing happens. We have a system. We'll talk about that in the room, Greg. It's a third-party stuff where we take that and we add it up with all those other 4 or 5 criterias, and we make sense of that. But yes, that trigger point is going to happen every day between 10 o'clock to 11 o'clock. Not between 9:50, I'd say 9:50 to 10:50. Most of the D1 filing is accumulated and done. If there's enough of it, it's going to translate into a big buyer and a trigger point. Again, they do not move the prices, guys. They do not move the prices because it's done through a filing. Okay, is done through D1 filing. So they don't move the prices. Again, who moves the prices? It's the retailers. Okay, retailers, hedge fund people, when they come in, they want to take a position, they move the prices. The big whales don't move the prices. So can you imagine? I'll give you an example, clear example. 3 years ago or 4 years ago, Oxy, Warren Buffett bought it at $42. He invested $60 billion in Oxy. If you were a retailer and you put $60 billion in Oxy, you'd have gone through the roof to probably like $4,000 price point. But that thing did not move. Okay, all of them were bought at $42.60. I'm talking about Warren Buffett, a legend, buying $60 billion, and that's how he invested. He cleared some of his Apple and Bank of America and he put into Oxy. Now, Oxy took about 3 weeks from there, once he got in, to $68. This is 3 years ago. And he took half of his position out. He made good, 50% money right there. So, again, he still has some stake in it. I think 8% stake in Oxy or 10% stake in Oxy. But they do not move. The whales do not move the market. They make the market steady. But retailers, temporary buy and sells, that creates demand and supply, right? So Mark, Trade Zero, or any option platform is good. Again, I'm going to bring you my Discord room really quick, guys. We had this discussion openly, and let's see if I can do my Discord. Oops. Oh no. What did I do here? Okay. Here we go, guys. So we have our Discord room right here, and you guys will find this power buy right here. Okay, and every day our ultra premium members will find it. Why is this thing not showing up, my cursor? Discord doesn't show my cursor over here. Okay, but this is what it is. Like a SPY call at 250 ended up from 10 cents, guys, 10 cents. SPY call ended up being $2.50. Okay, so this was a SPY. Then every day we're talking about this is our power buy. Okay, we're going to talk about very quickly our Reddit channel. Again, we are short bias basis. We know that. So look at this. Do you recognize these things? CMND went to $2.10 or $2 something. CMND. Today we had SLNH gave us a loss. Bird was okay. Beyond was not okay. Beyond initially gave 130 to 155. It gave us money in the morning. Again, we're going to talk about, so half of these things really blow up more than 100%. This is another channel. Again, we're going to stick to the option, but I'm telling you, we have a different channels. So we have short-term swing, long-term swing, short-term options, leap options. You guys are aware of that. Then we got penny stocks, and then right here is the power option. So these tickets, when big guys come in, it actually tells us when. And Michael and Linda put their things. We go with the based off earnings and news and sentiments and all kinds of, and the hot sectors. So it's a lot more than just finding big buyers going into it. Big buyers make it steady. They come in with millions, multi-millions of dollars. They will make the stock steady and attractive for other people to come behind it. Okay, and if you see this every single day, it's posted. We just started this like a week and a half ago. Now we're gonna go in the room, main room. Now we are talking about shorts majority of the time. So make no mistake who we are and what we do on an intraday basis. We are short. Okay, and we will put our charts when we are long. This was NVTS is a long from our Reddit channel, long-term swing, and it made 100% gain today, guys. Oops. It made 100% gain right there. I don't know where my cursor is. I can't see it. Here we go. You guys can see 120% gain on NVTS, and I've already executed it on the next chart where I've taken profit. I got in at 7 something and it ended up being huge. Okay. Then again, we shorted SJ 160, 120. That's happened, BIAs and all that. So primarily we're short. That's how we trade intraday, and we have a system for that. Now go back to the options that we're talking about, and we're going to stick to that. Power buy. So let's talk about how to execute options, because some of our members, we call this okay. So we're going to put this out. So in Trade Zero, guys, this is how you find an option. So let's just say today I have taken CRWV. Okay, and I have gone ahead for May 1st. I took it a couple days ago, by the way. So I have taken 125 call. The stock is currently at 116. You guys can see this, right? Clear? So this is option. You go into your option. You go into here and you have option chain. When you open this, that's what's going to open, okay? Your Trade Zero. You have to get access to it from the broker. So again, I'm going to show you Trade Zero as well as DAS. And like I said, if you want any other platform, I have a couple of them. So May 1st, and you're looking at 125. This is your strike price, guys, okay? This is your strike price. We're not going to look at the puts because that's not what we're looking for. So right now is 365. Okay, bid and ask is 395. I happen to get it at 437. Am I panicking, guys? No, I'm not. Okay. So you can put a limit order right here in order type. You can put a smart route, or you can choose your routes or whatever, daytime. You can choose your price. You can say 330 you want, right? Generally, I'm comfortable with the range, and I'll probably add a couple more when it falls a little bit below because I know what's coming with that. So let me tell you why CRWV is very attractive. So they have last week 3 times big buyers have kept buying this thing around 110, 112, 116, and 117. Now the stock hasn't moved, right? Week before, by the way, I've done CRWV from 90 to 120 in option just a week and a half ago. Okay, and you can imagine how good that was. So big buyers have come in, big bulls have come in. So power buys are there. 2, Meta invested 60 billion in it. The day Meta invested 60 billion, these guys went ahead and did some 10-20 million of dilution. Then somebody else came with CRWV, and the news was somebody else invested 20 billion into CRWV. Okay, and again they diluted like 5 million. Company needs money. This is a company that was, just a couple years ago nobody knew about it. So all of a sudden big investments are coming in, big buyers are jumping in, and their support and resistance on this. So let me go CRWV right here for you guys. Okay, so this is where I bought the contract. I don't know why it says 125, it was 116. And you can see, if I can move this right here. So last year they were as high as 184. So this number 135, because they have broken this area right here, 110, they're hanging around. This is, again, they have broken this area. You see this? So they've gone higher. They had not gone high since November in this area. Now this is the likely area they're to get to, and I've taken 125 call 10 days away from now. Now let me tell you, is there a risk? Yes, there's a risk in the stock market. There's a risk, but the risk is $430 per contract. So if I've invested $1,000, that's what my risk is. Now my reward, if by say this Friday this thing is a 125, you know where this thing would be, $4.37 entry, and I'm willing to buy another one right around 325, so my average becomes 380 something. So this is stock, if it moves above 125, 130, this is going to soar. Keep an eye on it. This is going to soar. Your option 430 will turn into a $20 in no time, in 4 to 5 days. If this thing was to shoot up, if tomorrow there's some concrete market momentum, whatever. Today I think there was a hearing for the Fed guy, the new Fed guy. So there was BS going on, and the market has stayed in red. Okay, they need a reason to stay either positive or red, and today's reason was that, one of the reasons I think. So anyway, this is where I'm looking to get to, but 125 is where I need to be, and after that it's in the money, right? So this is an example. I'm just giving it to you. Again, you go into options right here, and you want to see where that is. Hold on one second, let me show it to you. So I'm going to show you how to do the option in DAS. So you go into your quotes and you open option chain. So you go into your option chain and it will open up, right? So you're looking for this CRWV. Again, you're not looking for puts, so you can take them out. You're looking for 125. Right now, this is it. So this is what your options look like. Okay, this is my price right here. 438 is my price. The stock is at 382, but I'm willing to buy one more. And if, depending on the time, this can easily be at 559 if the stock hits 120 today. Okay, I'll be like probably 40% money, but that's not what I want. That's not what I want. Okay, so let's say 15 minutes chart. So on 415, this was a 725. And I am looking somewhere around first out at somewhere around $10 on this thing. Or I will ride it out. I will ride out my $1,000. And I go with every stock that I take option on 1,000. Once I make my average comes back, I'll cut it, or I will cut it remaining on the losses. But having said that, that's how you go in. You can look up, oops, what happened there, guys? Oh, what happened here? Okay, so we're gonna go, let's say MSFT. Something happened here. Here we go. So currently it's at 426. It's 1% up. And Microsoft also has big buyers from today. Okay, so big buyers means a whole bunch of multi-million-dollar orders. So if we say 440, it's a 427. So we're going to say 435 actually. That's what we're going to be interested. It's a 53 cents. Okay, 53 cents. No word that. Okay, here we go. So this is your price. Again, you have all day literally today because Microsoft came in. Microsoft has a news again. Oops. Whew, what am I typing? So look at that. We would have bought this option right around 10:20, and today I have not decided to get in. I made money on it last week, big money, guys. So you look at this again. This is a breakout area. This is your breakout area. This is already in the second lot, and then you're looking at 440. So 435, which is a February level, and then you go with more news and you do a little more studies exactly what is happening with it, and then again market sentiment, and we decide in our room that we're going to take 435 call 8 days out or 10 days out or 12 days out, and we'll pay premium, $5, $4, $3, whatever. We don't spend anything over $10 on a contract by rule. So maximum we're going to spend, and some of you guys can set up a rule that you don't want to buy anything more than a $500, so then don't buy anything that is more than $5. Just simply avoid that. But these are big caps.
Small caps.
And big caps do not go crazy, but when they start moving, they move in the trenches. Okay, so again, remember this was in February 483, so this is very likely to get it to 435. So this is a very attractive option. You buy this at 52 cents right now, and you probably, if it happens to be like 9 days away from it and Microsoft hits it by Friday or Thursday, 430 or 435, you're going to be almost guaranteed 400% in money. So that's how options work. You guys have any questions again? Let me know. So this is how you go, and then once you have this 46 cents right here, you're gonna go in 47 cents right here. You can put 45 cents. You can do 10 shares, meaning 1,000 shares, but 10 contracts. You can choose your route, whatever you want, and then you buy to open the call. Again, this is for, my bad, this is, we're going to do it for May 1st, right here, my bad. So this is 435 is $10, my bad. So we're looking at this right here, not the 52 cents. I forgot totally, my bad, it's apologies. So you're going to pay this $9, around $9, and it turns into a $40. You make about 400% on it. Again, by the time the stock gets to 430, this would be, even if it gets it by Friday, this thing would be $20, $22 from $9. That means, what exactly is your risk though? You guys remember the risk? Whatever premium that you have paid, that is your risk. So I have kept this course very simple, how to execute. Does anybody still have any question how to execute? Like I showed it to you in TradeZero, I showed it to you in DAS. Do you guys have any questions on it? Again, how do you close it? So once you bought it, you can click on it in your portfolio, and you can have where you can set the price, and you can say day plus, or GTC, and when the price reaches, it just gives you a hit. And what you do is, like, you have buy to open and you sell to close. That's what you do, sell to close. That's what you do, sell to close. Okay? That's pretty simple. No. The best part is no. That is the best part, Mark. So again, I will go back to my slide. Where's my PowerPoint? So Cheryl, first let me answer Mark really quick. So Mark, no, the answer is no. You can only take it between 9:30 and 10 minutes till 4 o'clock. And this particular option that we're talking about, the big bull option, which I'm really thrilled and excited, guys. I have tons of them. Like I said, it's not 1, 2. We went through it. I think only 1 out of 15 was down. Where actually, it wasn't even down. It was just down below, just like CRWV is down. The rest of them were 500, 600, 700%. And like I said, if you saw our options right here, if you're patient, ROI is 417%. 417%, okay, on options. And I can go back in Discord room. So most of you guys are our members, right? So go scroll the floor, the chat room, because it happened only in daytime. It happened in on the main floor. And you can see we discussed in open, Greg and a couple of guys, you guys were not there, but most of the guys were there in the room, and we pulled out anything and everything from last week and week before, and just about everything was hitting sweet. Okay, now we're going to answer Cheryl's question. Okay, so Cheryl, this is the key right here. The right, not an obligation, to buy an asset at a specific price before the expiration. Again, even if you take a put, so if you take the contract, you have the right, but you don't have the obligation to buy. Now, is there a little loop? The answer is yes. If you do not close it and you have more than enough money, the option would turn into a liquidity or cash into your account. And it could be terrible and it could be good. So let me tell you this. Let me give you an example. So you bought an XYZ stock. I'm just going to say XYZ. Let's just say QBTS, my favorite, one of my favorite, because I'm long on QBTS since $15, right? So QBTS, you bought it at 15 and you called it at 20 for May, and the stock is at $30. They're going to credit you stock for $20, not the 30. The money is going to come. Money is going to be, in the ATM, but you have an option to buy that stock at 220 price if you choose to. Okay, not at 438 or whatnot. You have option to buy at whatever the strike price that you call. Now, if it was negative, that also applies. Your strike price is what they're gonna credit you at. So if they executed that you didn't want it, best thing to do is close it on expiration date. Keep a tab of it. Again, you have the right to buy it, but it's not an obligation. Work with your broker, and you can set it up where everything expires and nothing gets credited in your account, period. There are ways to do it. Okay, you can do reminders, you can do broker where they'll just close it for you, when it expires. It's pretty easy actually. You let your broker know. A couple of brokers do it for you, where actually they would not convert that into an equity for you. Again, contract is you have the right but not an obligation. That's the key. So don't confuse that. It's not like you must because you took a contract. No, you have to call your trader. You have to call your broker. You have to call your broker. You have to call your broker and do the setting. Just like your max losses and this and that, you'll have to do that. Oh, absolutely. So that's the best part. Was I was telling you guys, that's the best part about options. So the cost that you were looking at it, for example, let's just say So you got in right here, right? You wanted to sell it right at this point, which is 22, and you got it at 250. That's 1000% right here itself. You want to close it all, go ahead. Right here. Okay, you can close it. Now, is it wise to go ahead and close it all at this point? The answer is no. Why? Because you are in the money. You are in the money. This is stock. Meta, you had called it for 640, I believe, from 625, right here. 625, you have called it at 640, and the stock is at 660. Now, you cannot lose from here. They will give you money as long as it stays above 640. Okay? 640 and above. That will be always in money. Of course, it's wise to go ahead and close it, the day, but if it keeps going up, you want to take more profit. Where is Meta today? Let's see where Meta is. So Meta is at 674. And would you have kept it? The answer is it went to look, when we saw this was at 670 itself, 676. It went to 690. And it's still 3 more days to go. So this was for this Friday, right? So can you hold it? Yes, you have already taken profit here. You don't want to close it all. If you have closed it, great. You already made 1700%. 1700%, guys. Not kidding. Okay? From the time on you took this when Meta was at 640, which was on 14th, 13th, right here. Look at this. 14th. Right here. This is 14th. This is exactly where we got it. So we got it for next week. Okay? This week, that is. Okay? So because the 17th was Friday. So what we do in Big Bull channel, option channel, that is, guys, that I'm so excited that you don't have to rush it. You take it almost 8 days ahead, 9 days ahead, 10 days ahead, sometimes even 12 days ahead. And you got plenty of time. Again, this thing, like, for example, held, took off, held, took off, held, probably higher. Okay? So when do you want to close this thing? First, take a couple 100% profit, so that way you offset anything that you're going to lose 100%, right? Second, let it run as high as it can and have a threshold or trailing stop or something like that. Let it run by, say, today is Tuesday and this is for 24th of April. So if it hits $700 or $710, you're going to be making even more money, way more money. Again, can you be greedy? Yeah, you have already locked your profits. You have put trailing stops. Yeah, where do you want to stop out? When the stop hits 660. Let it run. It's in the money. So, anything else I can answer for you, Mark? And you can definitely close it way before. But this particular one is very, very exciting, guys, because, again, the trajectory points are plenty. For example, again, why? There's a big funds are coming in, right? Then you see the support and resistance. You see some positive news. You see some good earnings or something around it. And then you see the stock is in a breakout zone. It just about sets you up for 80% win. 80%. So let's do the math, guys. Let's do the math. You're going to lose 3 times 100%. And let's just say you're going to make average 250%. So you cut it at 200, then you take it higher. Most of these are running 1700, 1800, 1000%, guys. I can give you an example again and again and again, okay? I don't want to do it because this is something different, but every single stock that we have had in last 2 weeks in this channel. I can scroll it up for last week, every single of them, guys. So this is 17th. Every single except one, okay, did not hit like 600, 700% mark, okay? Crazy numbers. Again, you can see when the buyers come in and where the stock is, that, you know, that's short stuff. Again, you can see this option. This is AVGO. This is Microsoft. Netflix. Look at Netflix. Then you got Apple. Even Apple, after buying it, held, and you have 8 days to go. After 3 days, it just takes off. You got Rocket Lab. You know, you guys know Rocket Lab from 58. We had a 58 with a $65, $70 call, and then $75. Rocket Lab is at 94. Same. This is the one that we talked about. Power buyers came in at 63, I believe 63. That's when they came in. Big buyers. So Greg, this is even more fun. So we used to go by the momentum and break and support and resistance and news and XYZ and our favorite, mid cappers. Now we have big buyers coming into this. Super stuff. And big buyers come in and we already know the stocks. It's not every stock, guys. And it's not every stock that big buyers put in money that we're going to go for. No, hell no. Okay. This is the one, that rare one that actually dropped, guys. It did go high up there, but it dropped from 410 entry right around, I can't show my cursor over here, but it dropped from that area to 490, like 12 area to 490. So you'd have taken 100% loss. But that's the anomaly. LITE was an anomaly, and somebody asked it. We didn't take it. I didn't take it, but the power bar had come in, and stock still kept going down. Now you want to see LITE since 414. Where is it? I don't think it has done much, but so. Oh wow, look at that now. So obviously I didn't take it and I'm not familiar with LITE. But you know what? LITE has gone up. So the trigger was on 14th, right? And this thing was around 500 something, guys. 600 something, what we just saw. And it's at 848. So it went down. And before, you know it, the big buyers, they came in. This thing has just skyrocketed. So I'm not going to, I think we'll waste a lot of time right now looking at every single thing. But having said that, we have a great channel. You guys have any questions, ask me. Again, our members, we can have discussions. My main objective was for our basic members who have never done option to show them how to execute it. Again, come in, relax. You got plenty of time to get in between 9:30 and 10:30. And you have 7, 8 days, 10 days to execute your profits or losses. Relax. Play 4 to 5 every week. That means put up $2,500 every week. 500 generates for you 2,000. Walk away with it. That means next 4 of them are dud, which is not going to happen because I've seen it. We have back tested it. We have seen it, and now it's time that you guys also get on board with this. You're going to win 70% of the time, and we're not talking about 100%. This is not a 100% gain. We're talking about 8 days time frame, perfect stock to pick. Take it as far as you can. All right, guys. Again, I don't think anybody has any questions. Good enough. Anybody needing any help, reach out to me in our Discord. For the people who are watching this video, you can join our HammerXtraders Discord. Go on our website. There's a 5-day trial. You can come on board and again, ask questions, learn. Don't be goofy. You can be fun, but don't do shitty stuff. But just come, have fun, make money. All right, see you guys later. Bye.